Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Thursday, the 16th of November. All right, as we come out of the North American session, the key theme, dollar gains on retail sales data, the Fed rate cut date unclear. Now, retail sales were slightly better than expected. The dollar's inched up, right? It's hardly moved. But I'll tell you what will be coming into the discussion is the Fed potential rate cuts, especially as we get inflation down into that 2 to 3% band they've been looking for. So interesting times coming up. Now, let me just show you the retail sales and actually the UK inflation numbers and what impact they had on the market. And it goes a long way to confirming what I was saying yesterday. Now, UK inflation numbers, slightly worse than expected, right? So you'd expect sterling to go down on that. And it did, but it didn't go far. And I'll show you that in the chart in a second. Retail sales, slightly better, but pretty crap numbers. Minus 0.1 versus minus 0.3 forecast. And that gave the dollar a little bit of room to come back a touch. But as you'll see, it hasn't come back far. And I was saying this yesterday, the inflation numbers are a trend changer, right? So these things won't come back far. What our job is to, at this point, is to try and judge how far the retracement is, right? But somewhere well below that previous support line, you'll find a level where the market is ready to jump on and sell dollars, right? Same with euro. They'll buy euro below the market. You can see it's retraced a little bit, but not far because the inflation numbers were so important. Now, sterling, yeah, we had weak inflation numbers, so it goes a bit further. But still, that brick wall down there where the market is ready to sell dollars, buy sterling, won't be far away. And it sort of coincides with that previous resistance line, which is now acting as support. Now, this is going to be the same for the Aussie, for the Kiwi, and for most of these instruments, right? Dollar Swiss, okay, will be the same. And in actual fact, we'll be looking for levels to get short, trying to judge the timing, right? That's obviously the key ingredient as we go forward from here. All right, so let's have a look at the numbers coming out today, right? Most importantly, and there are some big numbers. Aussie employment numbers. Now, Aussie's in the balance a bit, so these numbers will come into play definitely if there is significant variance. Weaker numbers look like a better opportunity. We've got Christine Lagarde speaking, the ECB president. We've got a bunch of Fed officials speaking through that North American session as well. And then we've got the weekly initial jobless claims, the Philly Fed manufacturing index, and the industrial production numbers, right? So these numbers themselves, I would consider them like second tier numbers, right? But they can add up. If they were, say, for instance, they were all really strong numbers, well, we're going to get a slight further retracement back to the top side in the dollar. But you know what? If they come out weak and the PPI numbers were weak yesterday, well, we're going to see the dollar start to move again. All right. So just focus on the overriding direction here of the dollar. It's down, right? Dollar yen. Well, we flirted once again with potential BOJ intervention. The market's going to get sick and tired of getting screwed over on that, but that's what's happening. Dollar CAD, well, it's trying to go down, but oil's going up, and that conflicts the whole move for dollar CAD, right? But euro, it's sort of still sitting in limbo, right? It's up here in the middle of nowhere. No one wants to get long here because there's a potential chance for retracement and also higher. Sterling, Aussie, and Kiwi have got previous trend lines we can work with. Same with sort of dollar Swiss, but if anything, I'll be looking to sell dollar Swiss back towards that resistance line, whereas sterling, Aussie, Kiwi, well, they're pretty close, right? So you can actually potentially harness those. And that's what I was saying with the Aussie employment numbers, a dip down through that trend line, previous resistance trend line could be the go. Now, just looking at the overall global markets, right? US Treasury, the prices are down, which means the yields are up, right? So you'd think the dollar would bounce from here, but the significance of the inflation numbers is going to keep the dollar depressed against most things. Okay. At the moment, going into the Asian session, we've got a slight risk on profile in the equity markets. It's starting to filter through into the currencies. Don't forget, this area has the data here has just been reset, so it's not exactly clear. You should see it become a little bit clearer over the next 2 or 3 hours as we go into the Asian session. But the dollar's not rallying with those bond yields bouncing, right? So just be aware of that. And just keep an eye on the data. That's where the flow is going to come from. Good luck and happy trading.